Siobhan, we have the latest BCI results in hand. We know that the third quarter was obviously a bad one. Many reasons why confidence dropped quite sharply all the way down to 43 index points. We had the unrest, the riots, issues at the Durban port, many others as well. Unfortunately, in the fourth quarter, confidence stayed unchanged at 43. Is it as bad as the headline number suggests?
Well, if we think about it, a lot of the concerns that caused that fall to 43 in this third quarter have started fading away. So, you bring up the unrest. Obviously, the unrest is over. We do still have some rebuild. So, not necessarily having bounced back to where we were before, but definitely an improvement on the third quarter. We went through the peak of our third wave of COVID during the third quarter as well. And that's also come off, and alongside it, easier lockdown restrictions. So that would suggest that we should see an improvement in your confidence level. However, replacing those shocks have been new shocks. So we have seen a steelworkers strike, which took 3 weeks, and that had quite a significant impact on quite a broad part of the South African economy. And we have also seen the resumption of quite intensive load shedding, which is also affecting confidence in the economy. And this is just adding to some shocks that we've been dealing with the whole year, being, the supply chain shortages that have been spoken about so much.
So new shocks replacing old shocks, which is most unfortunate because it does seem from the survey results that the fourth quarter did experience a little bit of an improvement in underlying demand, but we'll talk about that a little bit later. So your explanation makes perfect sense. It's probably also a good reason why we saw confidence coming down in 4 of the 5 sectors. But there's one industry or sector that bucked the trend, and that's the building and construction sector. Give us a little bit of color here.
Well, this is actually some really good news if you think about it. The construction sector has been a laggard for quite a long time, even before COVID-19. So this really is a very positive move, with confidence moving to about a 2-year high. It is worth bearing in mind that these results are likely as a result of improved non-residential building, largely in KwaZulu-Natal, in response to the, unrest and a rebuild, in response to that. So it is a positive boost, but, it does come with a bit of a proviso where it's probably not a long-term impact. It's not a long-term change in trend, but rather something that is going to be related to rebuild. And then, as that comes off, we're going to return to an area in the non-residential construction market where we're in oversupply. And so that then, confidence is likely to return to quite subdued levels that we were seeing beforehand.
So a very nice uptick in the fourth quarter, but limited to an improvement in confidence for those building contractors in the non-residential property market. So the factors might well be temporary in terms of having caused that improvement in sentiment. So caution. We have to be cautious here, not to extrapolate that result. Oh, fair enough. Let's switch the conversation a little bit. Globally, we often hear and read about companies complaining about a lot of things. Supply-demand imbalances, shortages of raw material, shortages of key inputs in the manufacturing process. These supply chain disruptions that people are talking about is creating major delays in delivery times, etc., etc. That's globally. Are we seeing in our results something similar affecting sentiment amongst the local respondents?
Absolutely. So starting with something like the manufacturing sector, we've actually seen quite an improvement in demand, both for domestic manufacturing as well as on the export side. But nonetheless, we see confidence falling. And I think a way of looking at it is when you look at our final production to demand. Since we see demand improving, it means that your final production must be staying either quite low or even falling. And our respondents tell us that, they're continuing to, to experience supply chain bottlenecks. So they are struggling to get the inputs they need for their manufacturing process. This was exacerbated by the steelworker strike, as well as the resumption of load shedding. Then you go and look in the retail sector, and I think the starkest of these is the motor vehicle sales. New sales has seen a decrease in confidence, despite the fact that, again, sales volumes are up. And what we're seeing is that your dealerships are saying, yes, we're seeing better sales, but actually, if we had more stock, we would have been able to sell even more. And so basically, insufficient stock is preventing them from having even better sales than they're already seeing.
So a very consistent story from global to local. Now, listening to you, it sounds to me as if many of these supply-demand imbalances, sadly, is going to persist. And as a consequence, we must not get our hopes up that we're going to see the BCI index improving much further, or improve or recover in due course. Would you go along with that?
Unfortunately, yes.
Thank you, Siobhan.